Good morning, everyone. How are we doing? Happy Monday. Hey, forget about it. Alexander R. Rasto, how you guys doing? Welcome to the Trading Syndicate. Good afternoon from very windy Liverpool. Hey, Colin, how are you? What's up, Raj? And welcome to the people who are joining us on YouTube. Happy Monday, folks. Now, real quick, a lot of people will be wondering when I'm going to switch to the new contract. So the new contract is here. It's traded 186,000 contracts. The old one's traded 188. As we go into the open, the new one will surpass the old, okay? And what I'm going to do is I'm just going to, for this session, I'm going to be using September on this session, after which I will post the December levels. I've got them all ready and everything. I just thought, since it hasn't caught up in volume yet, I'll just do the old one. We'll do the new one on the roll. Hey, Matt, how you doing? Hey, Johnny. So you can see the new contract is trading at 66.65 half. We're at 66.08, so it's considerably higher, and we just hit a new overnight high. And let's get into the breakdown and how we're going to look at this thing. Overnight inventory, my friends, is long. Okay? I would say it's probably about 85% long, as over 70%, maybe 80, 85% of the volume is above Friday's close. Hey, Ellie, what's going on? I put the weekend update video out. It was a little late. Sorry about that. But I said the liquidating inventory from Friday would be taken and sold higher during the night session. And that's exactly what happened. Okay? Market's working as it should. Liquidating inventory into wholesale hands. Hold it over the weekend. Sell it for profit. Get rid of it before Wednesday's Fed. Right? And this is great. You know what's great? I want you guys to think like villains. Right? Try thinking this way. If you could leverage people, right? So if you knew that people were short and you knew that they had to cover before the contract rollover, and you were long size, wouldn't it be smart to get rid of some of that size before a Fed meeting and get some cash, lighten up your inventory? But wouldn't it be great if you had desperate buyers so you could sell your product at higher prices? Do you guys understand now how this works? Right? It's not random, right? It's grinding higher because people are trying to cover. right? And it allows smart money to lose inventory. Just in case something happens. If, for example, the Fed says, you know what, we're not lowering interest rates, right? Say if you were long 5,000 contracts, right, down below, like under 6,500, right? Wouldn't you want to lighten that up and maybe have 500 by the time the Fed comes around, just in case things go bad, and you could sell everything up here? Right? We're still in distribution, and if we open up here, we're going to open on a gap. If we open outside Friday's high, we're going to open on a gap. So that's something which you want to watch, right? Large traders, Rosemark, don't use stop losses. If you're short 5,000 contracts, you cannot use a stop loss, right? When you're trying to transact size, it's very difficult. You have to take it back where you can, right? It's a different, it's a difference between trading a $20,000 account and a $600 million account. You know what I mean? And there are a lot of $600 million accounts out there. There's a lot of big money in this market. Make no mistake. There is a lot of big, sophisticated, institutional, fast money, not just investment money. Jeez, it's like a full-blown gale here in Liverpool. Whole building shaking. If I lose internet, it's because I'm in a windstorm. Hey, Dan, how you doing? All right. So we've had this short covering. It's been pushing the market higher and higher and higher now for weeks. Look at this. Right? Any kind of liquidation. Well, see, that's the problem. A lot of them are short because they're hedging. Some of them are short because they're trading in other accounts in another direction. It's a whole different kettle of fish. It's not at all like retail trading, Rossmark. It's a whole different world, right? It's like like say you wanted to be a race car driver, right? Well, you're driving a little go-kart with a lawnmower engine in it, right? These people are driving Formula One cars that have ground effects and they have metrics and data, and it's a whole different world, right? Suffice to say, all you really need to understand that world is to know where to look for the bid. Now, Thursday we came into these single prints, but we couldn't get into them Friday in RTH, right? And the highs, the market, the lows are moving higher. Yeah, it's just a different world that we're not ever exposed to those big speculative. Those people don't even have regular brokerage accounts. They have something called prime brokers. They don't even pay commission per trade. They negotiate their commissions at the beginning of the year. So even the way they pay commission is completely different than you and me, right? We pay every time we take a trade. They'll say, okay, I'm not paying more than $12 million in commission this year. And that's it. They have an agreement with their prime broker. And they get all sorts of perks, right? So the lows are moving up over the last couple of sessions here. That means that price is chasing the sellers. Sellers are raising price because they see buyers. We are getting buyers because everybody wants to cover before the new contract. Right? So if we get any kind of liquidation, yes, exactly. It's a completely different world, prime brokerage accounts. That area right here at 64.90 and change, 95, where this sort of skyhook was that threw the market up, any kind of retracement, that's the level I'm going to be looking at, right? And I'll put that level out on the new contract after the close, okay? On the upside, well, the upside's kind of unlimited, my friends. As you can see, there is no overhanging inventory anywhere here to sell into this to push price down. So the only selling you're going to get are from people who own the product at a cheaper cost basis. That's going to be, so who's going to be selling cheaper cost basis product? Wholesalers. But they're selling at every tick. And you have some position traders that'll be selling at previous day's highs and things. But once they're taken out, anyone, if you were swing long, why would you sell until there's a reason to sell? Right? Why would you sell until the thesis of your trade is broken? Things to consider. Overnight high is a double top. That's that competitive selling. Right? We'll go and mark our stops. What's our high now on the new contract? 66666? Well, what do you know? My out of style is coming back. Oh my goodness. See, this is a very hard now. If you were thinking short, that's great, right? If you're shorting this because it's now, why am I saying short, right? Well, you know why I talk about shorting? Because I know everybody's shorting the market. How do I know everybody's shorting the market? Should I play the music from Jeopardy? How do I know that everybody's shorting this market? No? Yes? The answer is more simple than you think, my friends. Yeah, because it keeps going up. If you guys stopped shorting it, it would stop going up. Right? The market keeps going up because exactly, right? There's no fundamental reason for this thing. Like, look at Circus Muscovus this morning, right? Look at that. Tesla high 420, 430.36, got over my $429 level, right? Too much absorption on the lower end. Yes, like a Bounty paper towel. Right? Look at that. We're over cost base. I told you guys on Tesla 361. Once it breaks 362, it's going to run. There's the run. Yes, he made the largest insider purchase of all time. Beautiful manipulation. Right? Just think how many people Musk got short here at 261, 228. And then added to that short at 328. Right? Now he's got them by the short and curlies. All right. Of course you're hesitating to go long at the high end of this, right? And you end up taking no trades at all. That's why, Rosemark, trading all-time highs is the worst. I hate trading all-time highs, especially trading all-time highs in highly computerized electronic markets where there's no smooth order flow, right? At least when we had all-time highs and humans were trading, they would screw up. And you would have opportunity, much more opportunity. When human traders are trading, they will naturally tend to get emotional, screw up, make mistakes, do stupid things, and that creates opportunity. Algorithms don't. Algorithms also don't need to be bailed out of jail at 3 a.m. for being drunk and disorderly, right? Unlike human market makers. So let's see where we open here. Let's see if we close that gap. And we'll get to work. And as usual, folks, we do the same thing every day, right? We are now in 8 times cost basis, right? My cost basis was 86 and three quarters to 88. Double it to 92. Double it to 6,600. Double it again to 16 and three quarters. We are seeing a little bit of distribution here. Let's see if we can take that point of control and move it up. I took one decent trade. Look below and fail of 65.88 up to 92 on that liquidation. And I just happened to be in the right place at the right time to get it. That's the only reason I got that trade. I was just in front of the screen at the right time. I wasn't talking to anybody, so I could concentrate. And I was able to take that quick 1 minute. And that's it. After that, I stopped trading. We've got bids at the previous day high. Previous day high, I mean Friday's high. So the market is bid Friday's high. That means shorts are trapped underneath it. Yes, I don't like going past 8. Right? If this thing starts just ripping, then I'll wait and then wait till it goes sideways and then do a cost basis. But right now we are at 8 times cost. Like if I had started trading, I might have used this as a cost basis, right? See this? Probably like there. Bang, 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 bang. You know, that would use that and then doubled it. That would work. You know, whatever you're comfortable with. Just remember, the zones aren't as important as the reaction, right? So now we know where our sellers are, right? So we've got sellers up at that overnight high, right? Look, they're all sitting like birds on a telephone line. They're all sitting there waiting, and as soon as the buyers come up, they whack it, right? But they stop selling at 6. So this is where they engage. This is where they stop. So that's why the market's gonna just do this back and forth in this little area here, right? Oop, right? This is distribution. So what the market does is it takes stuff, puts it in the truck, takes it up to the store, and then distributes it. When nobody wants to buy it, we go and take it to TK Maxx and put it on sale. And then after TK Maxx, you go to the outlet center, right? Then when we go past the outlet center, it goes, I don't know what the cheapest place is, but that's where it is, right? Do you view AI as a threat change for how markets work in the future? I think it'll be change. I've been around for 33 years, and some of the biggest opportunities are brought by change, Black Swan, and welcome to the room. When I started trading, there was a little company called Brex Minerals, which perpetrated the largest fraud in gold mining history. That fraud shut down the Canadian mining market. So anybody who had a Canadian mining deal became instantly poor. I focused on US deals, over-counter bulletin board, pink sheets, developing relationships with market makers, understanding US securities law, learning how to direct trades, learning US order flow, right? Garnering relationships with offshore banks, all of that stuff, and my business grew hand over foot. So a lot of big brokers who were making 100 grand a month were struggling to make 5. I was making 200. There's opportunity everywhere. It's how you look at it. I don't look at things as threats. I look at things as opportunity. Big change means big opportunity. Right? Never be scared of the future, my friend. Right? As the great Lawrence Taylor once said, you got to run it up the middle, baby. Yeah, don't worry. Just adapt, improvise, and overcome. Run it right up the middle. Don't be afraid. Right? Learn how to adapt. No, they're not faster at all. In fact, markets have slowed down due to AI and automation. Yeah, actually, markets have slowed down. They are less volatile now than they ever were. The AI and trade automation has made markets very, very precise. So you can use smaller stops in slower price action. It's wonderful. It is the best time to be alive as a retail trader right now. The action is clean, exactly. The price action is clean. Be the second mouse, right? Be the second mouse. Right? Yeah, I don't know anything about options pricing, unfortunately. Right? But I know this market like the back of my hand because it's the only thing I trade. So we are going to open on a gap. I don't want to roll the symbol over now. Has the old volume caught up with the new one caught up? Ah, we're close. We're close. Yes, look. 212908. It's just overtaken. It's just overtaken. There we go. That's why I got that flash. Well, let's get her going and say goodbye to September. Yeah, I've got the new contract up here. So you can see new contract is trading 66666 and the old one 6608. We'll finish out today on this one and say goodbye to September. Oh my goodness. Time just goes so quickly. So quickly. It usually turns out to be the 15th, you know? It usually turns out to be the 15th. Somewhere, it'll now overtake and it'll roll this week and then we'll say goodbye to September. Get all geared up for the next quarter, right? Fun and games. Point of control moved up. Look at that. There we go. Good distribution. See what kind of levels we got going here. 6616. The top of this zone is 6626 half. Yeah, you got to watch out for that. That's the only bad thing about trading futures is rollover. And the other thing, the annoying stuff about trading futures, one is rollover, the other one is the way they put their symbols out, like F.US.EPU25. Like, could you make that any more complicated? Right? Whereas Amazon is always Amazon, Apple is always Apple, no matter what month, what time of year. Right? That and rollover is a bit of a pain. But look what we get. No fake stock borrows, right? No PDT rule, right? So we actually get a lot. Oh. In our room, I've got posted how to roll this thing over. It's all there. Take a look. It'll help. That's right. You guys have better capital gains, right? Lower capital gains tax with futures. Yeah, no fees for shorting, right? Oh no, like we have to charge you so much because this stock is hard to borrow. Hard to borrow. Come on, that gag's so old it's got whiskers on it. Where we go, we're opening up on a gap. Let's look for a gap fill. Inventory is long. If we get accepted outside the overnight range above 12, go with that. Right? Just go with. But if we get back underneath the overnight range, be careful because then we could get past the open. So where your subway stops are, if you're above the overnight high, you can go long. If you get back under the overnight high, look for a test of the open and the test of that A low. Got it? The price action here is going to be choppy, but if you're long off that overnight high, put some offers out. Like I'm offered at 14 and 13 and 3/4. And let's see if I can get a print. If I can't, I'll just flatten. I'm out one at 13 and 3/4, out the other one at 14. And I was long 12 and 1/4. Okay? If we come back underneath the overnight high, be careful on your longs. Yeah, I don't talk about taxes at all because, Jesus. So we're still distributing, right? We're still distributing all this cheap crap up here. We're using the trap shorts. We're trapped underneath the overnight high. To hold the market up. Do we come underneath that old overnight high at 11.25? That's what I'm looking for. Do we hold or stick? Right now I'm watching. If we hold 11.5, 11.25, the trade's going to be to the upside. It's got no other way to go, right? It'll go slowly, right? If we get underneath 11, then look for the open to trade again, right? Remember, it's split between two contracts. The old one's kind of running out of steam. Very slow, right? I have no idea what's going to happen. In my head, I'm short biased. The only trade I've taken so far are two longs today. Even though I'm short biased, I'm trading against my bias on the long side when I see a bid. Just got to do it. Here's that overnight high. If we get underneath 11, look for 9.25. Okay? This is, Travis, where you're looking for a short. Now, if you find a seller at 11.5, you can sell next to them. But if that seller goes away, then you've lost your backup in the bar fight. No, traders just want to get out of their positions right now, Travis. Right? Don't worry about that. Pay attention to the seller. There was a seller underneath 11 just for a little bit. Right? That's what you want to be paying attention to. Keep it really simple and just watch the candle chart. It's moving real slow now, so it's perfect to learn. See how it's going back and forth over the overnight high? It's fishing for buyers there. The algo is doing the exact same thing that I used to do. It just does it much faster and more efficiently. See how it found buyers at 11 and started raising price to 12? That's what you should be paying attention to. See how the offer is moving higher? There's a seller at 12.5. And let's see if they stop selling at 11.25. If they run out of buyers at 11.25, they'll put price down to 11, 10.75. You're not going to make any money right now, so you might as well learn something, right? That's the way I look at trading. Hey, can I make any money right now? No, nothing's going on. Can I learn something? Okay, right? Use that time wisely. Look at the concentration of volume from 11.5 to 13, 12.75. That's all short covering above the overnight high. So let's see if that will last. Right? If it doesn't last, look, watch. Here comes the offer. Here comes 11. And then look at the response. If the response is weak, then it starts to tell you that they're running out of buyers and they're going to have to put it on sale. Watch the offer now. It's offered 11.25. 11. Ah, see how the offer just dipped underneath the overnight high? It's going down to catch those buyers down there. Does this make sense to you guys? Anyone? Is this thing on? Hello? Yoo-hoo. Is anyone out there? Okay. Gotta check and see if there's a pulse, you know? Okay. It is a very small distribution area. Exactly. Hey, Joe, what's going on? Hey, Renee. So this, who was asking about electronic trading and algorithms and all that stuff? This is a hallmark of electronic trading. It can stay at an area and just fill that area out so efficiently, back and forth and back and forth. But you can see that they don't need to put it on sale under 11, right? And we just saw that, right? So keeping it above 11 and a half, 12, that sucked people in. That's like when I used to have a nightclub. You put pretty girls at the front door, people would come and line up to get in, right? It's the same thing. People watch and follow price, right? They like the pretty stuff. Here we go. See if we could get up to 16 and three quarter. Now, there is going to come a day, I don't know what day it is, where there will be a liquidation. Okay? And this thing is a house of cards. So when it does start to liquidate, don't stand in there and try and buy it. Okay? I'm not telling you that's going to happen today, but when that liquidation comes, make sure that you understand this is how the market was built higher, right? Very shaky. Oh, you know it will. And then it'll bounce right back, right? Getting close. 50 to three quarters. Yeah, exactly. All right, so we got a seller at 16 now. Just under 16. So market's hitting all-time high on new and old contract. Price action is about as slow as you can possibly get. So now those who are short, because I know that there are people who are short, your first bid is here. 11 half 3/4. Okay? This is the first place you're looking for bids. Next place you'll look for bids is 9.5, and then down here at 6. There we go. Right? So say you hit it at 14, stop 16. I didn't, but just in case you did, you'd be looking to cover in the 10s and 11s. Yeah, exactly, Travis, exactly. Now, we've put in a good amount of short covering, and if you look at the new contract, right, we've already started to blow away the old one with volume. I got A period, I got 44,000 contracts. In A period here, I got 26. So already the volume's starting to fizzle out, right, in the old contract. So next stop, the open. Okay. Next stop is the open. If you're short. Past the open, the next stop is under that A high. We are looking for the bid now. Right? Previously we found bids here, but now the market's been open for 15 minutes. Let's see where the buyers are in that next 15 minutes. I'll be looking at 6, 6.5, 6 3/4, right down here. Right? So it's taken all the subway stops, like I told you. Overnight high to open. Open down to here. Right now, this is the gap fill. So there's going to be some buying before the gap fill. That's front-running shorts that are trapped here. They're coming in and they're buying. Look for the market to sell at 11 half. Right? Let's see if we can sell the 11 halves. Right? We're looking for a seller now. We found the buyers. We found the buyers right here. Let's see if where the sellers are. I did not. I forgot, Raj. Where is it? It's right here, isn't it? Is it 3? Yeah, it's at 3. I'll scalp, and what I'll do is after I'm done with you guys, I'll do some scalping on the new contract and see how it feels. Always get to know a new contract. Just don't go jumping in. Looking if we can get back under 11 again. No, I don't use. Some people do use that, and I used to do the look below and fail of the open. You can take a look below and fail, JT, here, right? Here's how you do it if you're going to use it. I haven't done it a lot lately. So say it looks below and fails. You buy like 10, 9.5. You use the open as your reference, and then you can use the A low as your out. Now, that's a nice structure. That's quite a large stop though, right? That's the problem with it. And if that A low is down here and the open's up here, then you've got a long distance before you've got a structural stop. That's why I like using the levels on the 1 minute. In the old days, the look below and fail on the open was better because the ranges were not as big. So those market profile trades in the old days were a lot more manageable because the ranges were smaller, so you didn't have to spend an insane amount on risk, right? Hope that makes sense. That's why I like the look below and fail on these candles, right? Like there's a look below and fail. So there you get your look below, fail, long, stop is tight, right? And then you just sell into this move. How do you get rid of this click to rollover thing? I'm sure it's... Ducks are still quacking. Yeah, I'm not going to fall for that one, Hank. Didn't just fall off the turnip truck there, Bobby Hill. Okay, we took out 16 and 3/4. Right, so now it's starting to get silly. Do we accept? Do we come back? Is this a look above and fail? Right, we don't know yet because it's choppy as heck. And this is where you'll have to go to 16 and it's a pain. So you could just redo your balance zone if you have to. Oh. How long does it get to get some real profits from the market with my coaching? It really depends on you. I've got people who start making money right away. If you're really, really, really stubborn and I have to like deprogram you, it takes longer. Depends on where you are as a trader. I have one of my guys who was already doing kind of well, but he was losing too much money. I helped him with drawdowns, and you know, took him 3 weeks. In his first quarter, he made like 400 grand with me. Right? How bad do you want to learn? How willing are you to take instructions? Do you do what you're told? How well can you follow orders, Fancy? If you're interested, send me a message. I'd love to chat with you on the phone. And I'll do that with anyone who's interested in coaching. Right? It's lifetime coaching. So what I do is I hedge thinking, you're going to take some time. That's why I charge one fee and you got me for years. Because I'll tell you something, most people aren't profitable right away. Hey, yes, what's going on? Right, so we still have not filled the gap, have we? Right, gap did fail to fill. Trades to the upside. Right, if you're long, just use the levels, friends. I'll just keep things real simple here. Yeah, I don't really want to go 16, Moran. I'll go another 8. And hopefully we kind of slow down. Right? I see a look above and fail of 16 and 3/4. Your risk would be 18 if you were short. Right? If you're short here, your stop's at 18. Right? This is a typical look above and fail. Let's see if the next candle stays under 16 and 3/4. If it doesn't, does it stay under 16 and 3/4? You could be early, my friend. That's okay. Right? The other thing too, folks, is you got to understand you only have a certain amount of capital to trade with, right? I mean, unless you've got like 100, $200 million to trade with, you'll want to take your time and not blow all that money that you have, right? So that's why it takes time because you don't have the luxury of making a lot of mistakes. So it really helps to sit back and watch sometimes, and it also really helps to know when to do business. Like I've taken one trade a couple hours ago, and then I took one trade 10 minutes ago for a couple of points, and I haven't traded again. Now, if you've been trading all the while I've been talking, in and out and in and out and in and out, how profitable are you, right? Knowing everything that we talked about in the pre-market prep. We told you not to overtrade. We told you not to size up, right? We told you to wait for your opportunity. We told you that the contract volume would be split between two contracts, therefore you'd have less follow through immediately, right? Simple. Just keep it early. Keep it simple, right? Yeah. And this is the worst kind of price action to short because you're not really shorting the price action, you're shorting the transactions. And right now, there is no seller, my friends. There is no seller. They don't need to sell under 16, so why would they? Why would you? So why would you short? Because it looked like a look above and fail. That's the only problem is the next couple of candles took us above 16 and 3/4. And then it's going to do this, where it goes sideways over a level and then either does that or this. But this is what drives people crazy. I would prefer to short under 16. Then I know that they really need to push the price lower. So I don't see a short until I see a seller under 16. And I don't want to buy an all-time high of a market when the price action is this slow. So that if that means I don't trade until my setup presents itself, then I don't. Right? There you go, Hank. There you go. What is Elon Musk trying to accomplish? He's just doing business. He's just doing business, my friend. It's just business. It's how's the stock doing this morning? Where are we at? 429.17 was my level. We got to 430.36. That was close. That was close. There's always something running these days, friends. Yeah, I don't know what he's trying to accomplish, but let's just say it's going to benefit him. Okay? Pretty much, eh, Raj? Job done. Look at how the stock reacted. Now the question is, did he borrow against his Tesla stock to buy more stock? And the circle of credit continues. All cash? Beautiful. Then it's not subject to margin call. All right, here we go, folks. Past 19. Let's see. Interesting. Interesting. All right, folks. Next stop is, well, I've got 26 and a half. And on the new contract, we're past 75. We're into the 77s. Good Lord. Yeah, this is a runaway train for the short sellers. Really brutally bad. B period opens. Really now want to see if we can take that B low and get it anywhere near the overnight high. If we can't, please do not step in front of this on the short side. I've got some levels here, and I'll just give you guys these levels on the new contract. Okay, I know it's a bit confusing, but we're about 25 points away from 6,700. And yeah, so there you have it. It's one of the craziest short rallies I've seen. Just when you think you've seen it all. Boy, oh boy. These guys really have taken the shorts out to the woodshed on this thing. Okay. Let's see. Do we get a look below and fail of 16 and 3/4 and back up? Or is this the sell that everyone is waiting for? Yeah, no kidding. So if you're shorting, thinking it's a look above and fail of 16, get some bids down here underneath. You know, get some bids down at 16 and 15 and 3/4, 15 half, so you can cover. Right? It's just the backfill. Right? You guys okay? Very quiet. So this will be the last 26 minutes that you'll see this chart again. Then we'll be back. We'll be on the December chart. I'll post all the levels and stuff. There's only yeah. It's not. There's not much to trade, is there, Pollux? It's pretty brutal. It's okay. It'll get better, and then Wednesday we have the Fed, and then life will go back to normal. Hey, how you doing? You recovered? That's good. That's okay. You all right? That's all that matters. Good to have you back. No, that's not a business reason for the trade. That is an execution of a trade, Travis. But the business reason could be now that there's a seller under 16 and 3/4, right? You understand, Travis, what I'm trying to do when I talk to you is I'm trying to get you to think like you're the one who's selling. So you can understand why price is going down so you can actually short, right? That's why we like the look above and fail, right? Because the fail means that they have to put it on sale, right? And that is backfilling, right? Backfilling is the start of sellers competing. Cost basis is the POC is the fancy way of saying cost basis. It You're right. Good to see you, Mohammed. Selling from a long position, right? Travis, exactly. Not from a short position. So you're selling from a long position, and that long position is size, like 5,000 contracts, 7,000 contracts. You're a wholesaler, right? And you've sold contracts from 16 up to 19, 20. Now you've jammed those people with contracts. They're starting to sell. So what do you do when they start to sell, Travis? Right? So when they start to sell at 19, what do? You sell 18 and 3/4. If they go 18, you go 18 half. And then you knock out all the 17 bids. And you force them to sell lower, and you guess what? Then you buy it back from them. And that's how you make money. Exactly. Right? You sell it to them at 20, you buy it back from them at 15. Then you sell it to them at 16 again, right? right? Then take it back up to 23, sell it to them again at 23, buy it back from them at 19. This way you get to abuse them on the way up and on the way down. Now do you get it? So you need a seller and a group of sellers, right? Exactly. And if you see a bunch of buyers, guess what? The sale is over. Prices are going back up. Why? Because it's greedy bastard day for Travis, right? For wholesale, it's always greedy bastard day. Always remember that. See how they found bids under 14 and 3/4? So they started to lift the offer, right? But there's not enough buyers to warrant raising price over 17 yet. So they'll just sell it at 15 and 3/4 and be very happy. Because they paid 2 and 3 and 4 for it. So they're making out like bandits. Their last cost basis is between 8 and 10. So if you got 8 to 10 product, you're selling it at 16, you're laughing, right? So if you're a short seller and you see it going on sale, you're looking for a look above and fail of 16 and 3/4, but it stops out at 14 and 3/4. Now you understand that hit and run shorts are the way to go on days like this because of what's going on in the market. But eventually, one of these days, someone's going to have to sell something. I don't know when that is, but eventually they're going to have to sell one of these crappy stocks. That's why this market sells off for one day, two tops, and then it bounces back higher than it was when it sold off. See how they could slowly sell it down, Travis? Right? So, for example, if you were log 5K here, sell it, put it on sale, sell it, and now you're just like slowly selling it, selling it, selling it, right? And you're still making a profit. Until you come to this area on this position, you're still making a profit. You can gently sell it down. Whether you sell it at 14 or 12, who cares? You paid 8 for it. Know what I mean? Cost basis is everything. Oh, yeah. They're always dialed in, Travis, because they get the order flow. Right? And they'll just keep tapping it down. Tap, 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 tap. As soon as they find, yeah, exactly. We are at the top of 8 times cost basis. slow, leaking, right? If you're short on a look above and fail of 17, 16 and 3/4, that's great. Just make sure you have your buy orders down here because when we get to the overnight high, there's going to be some competition, right? All right, it's time to get back to work, right, Travis? Yeah. There you have it. There you have it, folks. As long as your offer keeps moving lower, right? You can stay short. This is the front side of the move. This is the back side of the move. One of the most normal places where buying is going to happen is that overnight high. And that's why you're seeing the market kind of stop and pause here, right? Because that is just a few ticks above the overnight high. So that's called front running, right? That's why you're getting a little bit of a push back up, right? Now let's see where they sell into it. Do they sell at 14, 15, 16 like they did last time? Let's see. Watch. So if you were short 16 and it got down to maybe 13 and a half, cover, right? Get paid, right? This is what the saying in this room is going to be from now on. Get practical, get paid, right? Get practical, get paid. Simple. Let's see. Hey, Patty Lou, how you doing? It's a bit slow right now. The new contract is traded 100,000 in A and B period. We're at 66, so I'll get those levels up for you in the next 15 minutes once this session is over, and we will say goodbye to September. Any questions, folks? And we are looking for the overnight high again. We found sellers right at 16. I've got to say right now, I think once the short covering starts letting up, we'll start seeing lower prices, right? Thanks, Dan. Oh my goodness. Yeah, no problem, AZS. Have a good one, man. No, you know what? It's very slow and it's really hard to get a good beat on this thing. I I'll take a little 14, 13 short if that seller is still there. I really don't want to trade this, right? I really don't want to trade this, but gun to your head trading, if you were shorting and you have a seller at 16, you have a seller at 15, you have a seller at 14, eventually we're going to take that B low and try and come down to that overnight high at 11 and a quarter, right? But boy, it is tough getting lower. Because every time we get under 14, getting close to those 13s, as soon as we get down there, the buyers just look, they just start popping in, right? Hello, I hear you're having a sale. So I see a seller at 14 and a half, right? So I'd short that, right? Short that and then put some bids in at 13 and a quarter and see if you get filled, right? So you sell like 4 or 5 contracts at 14 quarter, cover one at 13 quarter. Let's see if I can cover the next one at 13 half. Like I'm just scalping to see if that seller's still there, and if not, I'll scrub the trade, right? See, there's that seller. If it's gone, we'll get over 15. Watch. It'll tell you right now. See, look, there's a seller at 14 and a half. Ah, see, they went. Right? You can watch that, and if you can see if they come back in, if they see buyers, you're hooped. Right? If you're selling in the wrong trade location and your seller goes away, your trades can get out of control very quickly. Right? As you get to a structural place where you anticipate buying from short sellers, right? Are buying here. That's why when you come into this area, if you were short here or here, this is a place that you'd want to be covering instead of initiating. Hope that makes sense. All it takes is for one big order to come into that order book, and next thing you know, it'll just rip higher because everyone's kind of walking around, trying to get the last chair before the music stops, right? So that's why you've got to really plan out your trades and try and make sure that you're only risking money when you have a higher certainty of a trade working out because of the business. Right? If there's uncertainty and it's really uncertain, really unstable, really uncertain, really unreliable, unpredictable, you don't have to spend money. That's when you should protect your money. Ah, boy. Well, folks, it's going to be a long week. Pace yourself, okay? Let's hope so, Renee. Usually when I get off stream, it starts to move, doesn't it? Oh, boy. It'll be funny if it does that today. Oh, man, look at that. Back over 16 and 3/4. Whew. Short seller cannot catch a break. Good stuff. Any questions, folks? Don't worry, it'll get better. Hey, Taco, how you doing? Here you go, little Vince Lombardi. Uh, well, folks, hope you're not short going into the next letter period. Please be careful. Oh, good stuff, Rupus. Yeah, you know what? It's okay to take a week off. Nothing wrong with it. Take a couple of days off. You know, I completely listen. If it weren't for you guys, I would be in Spain right now, just walking on the beach without a care in the world. Month end and contract rollover. Best times to go take a little vacation. You know, really good times to take it easy. And with that, my friends, I will leave you for this morning. Please be safe out there. I'll have a new chart book in the room for you guys, in the room. And I will start putting the new levels and everything like that as soon as I'm done this video. Thank you, everyone. Have a wonderful, wonderful day. Please be safe out there. Don't throw your money away, right? Thank you so much. Hey, Ben. How you doing? Trade smart. Got all the time in the world. Thanks, everyone. Really appreciate you guys being with us at the Trading Syndicate. Come join us if you want to learn how to get practical and how to get paid. Right? Practical trading, getting paid, keeping the money. That's what we're all about, right? We squeeze as much money as we can from this crazy, weird market. Okay? See you folks in a bit. Bye for now.